So we just have seen the worst case scenario, right? So everything's going to go pear-shaped, everything's going to be horrible, interest goes up, geopolitical problems, Germany has not strong government, more bureaucratic, less apartment on the market. So now we're going to talk about the good stuff, the best case scenario, and please rate the different scenario options yourself. I'm giving the best case scenario around 20%, a little bit more than the worst case scenario, which I gave around 10 to 20% likelihood it's going to happen, right? So year 2025, let's call it 20% likelihood. That's the best case scenario. And you need to watch this video because you need to understand as a seller or buyer what you should do in the market. So best case scenario, let's call interest going to drop again. So we now have around 3.5% interest. Let's say we're going to have 2.5, maybe 2% interest, okay? Best case scenario. The reason why we have less interest is inflation goes down, economy maybe is going to stabilize, German economy is getting a little bit better, we're having less geopolitical problems, the war is ending in the Middle East, the war is ending in Ukraine, we're having a sort of called agreement with the US, agreement with China. So everything is really good and people are getting in a better mood, right? So that's the best case scenario. So if that happens, what do you think is going to happen to the real estate market? Big question. There are very different angles on that. So let's call it best case scenario, buyer side. Okay, buyer side means that if interest is going down, what's going to happen to the sales price? That prices will go up, right? So prices will go up. And if now interest is 3.5%, and let's call best case scenario during the course of this year, we're going to go down to, let's call 2%, 2.5% interest, prices will go up quite significantly because people only can buy in Berlin. The rental market is completely regulated forever, so every investor is only buying new build. There are very few developers completing new build projects at the moment and very little planning permits out there, so you can be sure that the rent will go up in the future, and then people have to buy. If people have to buy, there's going to be a huge rush on new builds, huge rush on existing apartments on the market, and we're going to sell all of them, and during the course of the year, prices will go up. As a buyer, you can make your own mind up if it's better to maybe let's say 1% more interest, but I get a better apartment, a larger apartment, or I wait, I pay less interest, and during the course of this year, I'm going to have a huge competition from other buyers and prices will go up. That's your decision. Mathematically, from a buyer's perspective, it's better to pay a realistic interest, let's call it 3 to 3.5% interest, which is still a good interest, and then have less competition on the market, and you still can pick the right units for you, okay? Again, if you can afford it, of course. From a seller side of things, if best case scenario is going to happen, the market looks quite different to you because you actually should consider to wait. If you think interests are dropping down significantly, then you shouldn't sell in January, February. You should wait until summer or maybe end of the year 2025 because then you get a better price. Having said that, that only makes sense for you if you, assuming the price will go up, let's call it 3 to 5% by the end of this year, if you have no reason to sell fast because you have no way where you want to invest the money, right? If you have an idea where to invest the money, please keep in mind, if you invest the money on the stock market, if you invest the money on other real estate, you maybe get a much better interest, right? So ETF, MSCI World, you get around 6 or 7% interest on average. So don't forget that. So if you sell now for, let's call it 5% less, best case scenario, then you might want to get by end of the year, you still have the option to take the money, invest into the ETF, which is very boring, but I think you're going to get 6 to 7% return. So you actually still have more return on the ETF than in real estate if you take the equity out, right? And you're more flexible. Please keep that in mind. A lot of sellers don't understand that. We call that the so-called opportunity cost. So that's the best case scenario. In the next video, I'm going to talk to you about the more realistic scenario.